Ladies and gentlemen, good day and welcome to the Minda Ltd Q4 and FY2024 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sunil Bora, Group Chief Financial Officer from Minda Ltd. Thank you, and over to you, sir.
Thanks, Zico. Good afternoon, everyone, and a warm welcome to all the participants. On the earnings call today, I am joined by my colleague, Ankur Modi. We have uploaded our financial results and investor presentation for Q4 on the stock exchanges and our company's website. I would like to begin by giving some insights on the economy, followed by the current scenario in the industry and our financial and operational performance for the quarter and FY24. Post that, we will open the floor for Q&A. The global economy is displaying signs of recovery, with inflation moderating and being projected to grow at a rate of 3.1%. However, amidst the prevailing global uncertainties, India's economy continues to exhibit remarkable resilience. In the third quarter of FY24, India achieved a growth rate of approximately 8.4%, surpassing expectations. This growth is driven by factors such as continued demand momentum across various industries and segments, increased government capital spending, rural demand also rebounding. India's manufacturing activity reached a 16-year high in March with PMI index of 59.1. This surge has created more jobs, with unemployment data showing sharp reduction, overall reflecting stronger growth in new orders. All these factors pointed to a sustained growth. India's GDP growth for FY24 is expected to be 7.6%, surpassing estimates by most global agencies. Speaking on the auto industry, the industry witnessed robust production volumes growing 10% year-on-year for FY24 and 21% year-on-year in Q4 FY24. With strong domestic demand and increasing share of exports worldwide, India has positioned itself as a global automotive hub with a promising future. In the passenger vehicle market, SUV share continued to grow, now holding a substantial 50% market share. During Q4 FY24, production volume increased by 10% year-on-year, reaching 13.4 lakh units. For FY24, the PV segment witnessed a growth of 10%, inching towards 5 million units. Notably, both retail sales and production of passenger vehicles achieved an all-time high in FY24. On the back of improved vehicle availability, a compelling model mix, and successful launch of new models. Additionally, sustained demand growth in our under-penetrated India market, strategic marketing efforts by OEMs and the government investment in road infrastructure contributed to the overall sales and production growth. Moving on to two-wheeler segment, in Q4 FY24, the production volume stood at 55.24 lakh units, delivering a strong growth of 26% on a year-on-year basis. For the year ending March 2024, the segment achieved highest production in the last 4 years with 21.4 million units, recording a 10% YOY growth fueled by improved rural demand, enhanced model availability, the introduction of new products, and a positive market sentiment, alongside the burgeoning EV market and strategic premium segment launches. On the CV front, for the quarter ended March 24, the production volume stood at 2.88 lakhs as compared to 2.9 lakhs in the same quarter last year. The segment is witnessing stable volumes. However, our outlook remains optimistic. With expected upswing in industrial and manufacturing activities, the segment is poised for growth. For FY24, the production volume stood at 10.66 lakhs, a growth of 3% on a YOY basis. The growth is attributed to the segment's adeptness in leveraging government tenders, improved road connectivity, and strategic bulk deals. Talking about electrification, in March 24, India achieved a remarkable milestone with electric two-wheeler sales surpassing 136,000 units, marking an impressive 50% YOY growth. Throughout the entire financial year, sales soared to nearly 9.4 lakh units, reflecting a substantial 30% year-on-year increase. This surge was partially driven by customers pre-purchasing vehicles ahead of the expiration of the FAME-II subsidy, complemented by year-end discounts. On conclusion of FAME-II, the government has announced a fund-limited scheme with a total outlay of 500 crore for the period of 4 months with effect from 1st April 24 to 31st of July 24 for faster adoption of electric two-wheelers and three-wheelers to provide further impetus to the green mobility and development of electric vehicle manufacturing ecosystem in the country. The road to electrification is inevitable and India is poised for substantial growth with strong emphasis on sustainability and thrust on local production. Industry outlook. Heading into FY25, the Indian auto industry is poised for growth amidst a mix of optimism and challenges. The excitement around new product launches, particularly electric vehicles, sets a forward-looking tone. Manufacturers are gearing up with better supply chains and an array of models to meet diverse consumer demand. Economic growth, favorable government policies, and an anticipated good monsoon are expected to fuel demand, especially in the rural areas and the CV sector, which is closely linked to infrastructure projects and economic activity. Market sentiment is cautiously optimistic, with the industry banking on improved customer engagement and financing schemes to boost sales. However, it faces challenges like high base in PV segment and intense competition. The focus is on overcoming these hurdles with innovation and strategic market engagement, aiming for a balanced growth across all segments. Coming to financial and operational performance, you may refer to slide number 5. We have recently secured the allotment of strategic land parcel of around 94 acres from HSIDC at IMT Kharkhoda in Haryana. This will help expedite our ongoing and future expansion. A part of this land has been designated for the greenfield alloy wheel plant of 120,000 wheels per month, announced in Q2 FY24. Post the groundbreaking ceremony, the work has started at the site. As you know, we have been proactively securing land parcels in all major auto hubs to be ready to meet growing demand. Last year, Uno Minda had acquired 86 acres of land at Khed City Industrial Park, Pune, followed by recent acquisition of 37 acres in Hosur, Tamil Nadu, and now 94 acres in IMT Kharkhoda, Haryana. While we continue to evaluate more land at other locations, the proactive land acquisition and greenfield projects demonstrate our commitment to staying ahead of the curve in the rapidly evolving Indian auto landscape. During the quarter, we entered into technical license agreement with Starcharge Energy Pte. Limited to manufacture and sale of electric vehicle supply equipments in India, further building on the E4-wheel specific portfolio. We will discuss this in details in subsequent slides. We have completed purchase of 26% stake in Minda Westport Technologies Limited in April 24, increasing stake to 76%. Minda Westport has now become a subsidiary and will be consolidated in financials from Q1 FY25. The compressed natural gas powered vehicles in India have increased by 32% in FY24, in line with increasing CNG penetration. Minda Westport revenues have also grown by 156% to 277 crores in FY24. With better availability of supplies, new CNG model launches for PVs as well as CVs, strengthening of CNG infrastructure and the CNG penetration, it is further expected to increase levels of about 18% by CY27 from current levels of 15% penetration. This presents an exciting opportunity for Minda Westport going forward. Coming to financial and operational performance, you can refer to slide number 7 and 9. At consolidated level, revenues from operation for the quarter ending March 24 increased by 31% year-on-year to 3,800 crores from 2,900 crores in Q4 FY23. The growth was evident across all product lines, with particularly strong performance from EV products, lighting, switch, sensor, controller, and alloy wheel business. Some of the businesses which played a significant role in the substantial growth are primarily from 1. Capacity expansion and ramp up in 4-wheel alloy wheel, 2-wheel alloy wheel, 4-wheel lighting Gujarat plant, and 4-wheel Chennai plant. 2. Increase in revenues from EV specific products under Uno Minda FIU and controller. 3. Market share gains in 4-wheel lighting business. 4. Increase in kit value with higher sales of SUVs in passenger vehicles and premium model in 2-wheeler. And last, increase in exports for seating and 2-wheeler switch business. As you would have noted, EBITDA for the quarter was a record at 474 crores, reflecting a 48% year-over-year improvement from 319 crores. Besides benefit of operating leverage, as normally expected, the current quarter also benefited from yearly price increase settlements. Finance costs have increased to 32 crores in comparison to corresponding quarter last year on account of incremental borrowing for capex and working capital. The depreciation has increased in line with capitalization of new projects. The share of profit loss of associate JVs for quarter jumped to 58 crores as against 24 crores in Q4 FY23, as Benzo, Roki, Westport, TRMN and TG, all businesses witnessed significant growth along with turnaround in Minda Ltd. As you would see, there is an exceptional income consequent to the decision of Honorable Supreme Court that interest on CVT portion towards EPCG liability is not payable. The related provision has been reversed, and this being a one-time item has been shown as an exceptional income. The profit after tax, which is Uno Minda's share for the quarter, was at 290 crores as against 183 crores. However, excluding the exceptional item from the profit, the quarter would have been 269 crores as against 290 crores, which is a growth of 40% year-on-year, 47%, sorry. Moving to financials for FY24, we have achieved consolidated revenues of over 14,000 crores for the year ending March 24, registering a growth of 25% on year-on-year basis. We would like to highlight that industry volume growth for FY24 was 10%, and against which we have grown by 2.5x, significantly higher than our long-term guidance of 1.5x. The EBITDA for the period grew by 28% at 1585 crores, registering EBITDA margins of 11.3%. The profit after tax, which is Uno Minda's share for the period, excluding exceptional item, was at 861 crore as against 654 crores in corresponding period last year, reporting a growth of 32%. Coming to the business segment-wise performance, starting with switches, if you can refer to slide number 12. Our switching system segment performed exceptionally well, generating 963 crores in revenue for quarter, representing a significant 25% of our consolidated revenues. The segment grew 14% for FY24, generating revenues of 3,663 crores as against 3,203 crores in FY23. This growth can be attributed to smarter switches with increased number of switches per vehicle. Additionally, exports in the two-wheeler segment emerged as a major growth driver, signifying our global competitiveness. Moving to lighting business, it continues to be a key growth driver for Uno Minda, generating impressive revenues of 972 crores during the quarter, representing a significant 26% contribution to our consolidated revenues. For full year, lighting business achieved revenues of 3,368 crores, growing by 31% on year-on-year basis. As communicated in past, we had some significant strategic order wins over past few years. These businesses are gradually commencing production. This is significantly propelling the growth trajectory of the lighting business, particularly in the four-wheel segment. Our lighting business has delivered significant growth in recent past, with four-wheel lighting business almost doubling in less than 2 years. This success is driven by our market-leading innovative lighting solutions to that empowering OEMs to differentiate their offerings in the marketplace. We are currently supplying 3 long tail lamps and 1 signature LED front DRL for EV model of the largest PV EV manufacturer in India. This unique signature DRL comes with welcome and goodbye sequence and charging indicator. Buoyed by success in Indian market, some of these models are also being launched in global markets with manufacturing in these global geographies. We are confident that this positive momentum to continue, fueled by sustained SOP and continuous expansion of our market share. Moving to casting business, it delivered a robust revenues of 770 crores in Q4, accounting for a substantial 20% of our consolidated revenues. Out of 770 crores, four-wheel alloy contributed 436 crores, two-wheel 204, and casting business 130 crores. The casting business revenues for full year grew by 30% to 2,830 crores. Both two-wheeler and four-wheel alloy wheels have been witnessing good growth, supported by capacity expansion. Four-wheel alloy wheel capacity stands at 390,000 wheels per month, running at almost 100% utilization. The 60K expansion at Bawal is delayed, with 30K expected to commission in second half of FY25, and the work on remaining capacity will commence depending on the necessary approval for land acquisition. We started construction for 120K wheel per month greenfield plant at upcoming Auto Hub IMT Kharkhoda, which will be commissioned in 2 phases of 60K each. The first phase is expected to be commissioned by Q2 FY26. Within alloy wheel, we are seeing preference for different varieties. During the quarter, we have received a large order for diamond finish alloy wheel from a Japanese OEM for the facelift and a new EV model. Alloy wheel penetration in PV has reached around 45% from 15% when we entered the market. Along with the growth in market, we have cemented our position as the largest manufacturer of 4-wheel alloy wheel in the country. At our 2-wheel alloy wheel business, the additional capacity of 2 million was completed in the last quarter and is having stable operation. This expansion brings the total installed capacity for 2-wheel alloy wheels to impressive 5.4 to 6 million wheels per year, depending on the weight of the wheel. With this additional capacity coming in, we have broken into the top 3 2-wheel alloy wheel manufacturers in terms of capacity and market share. Additionally, as you would have noted, Board has also approved expansion of the plant by another 2 million wheels per annum with an investment of 300 crores. Over the last few quarters, we have significantly diversified our customer base with around 5 key customers with business in both scooter and motorcycle segment. During the quarter, we received order for American 2-wheel OEM model manufactured in India. Moving to seating business, a key contributor, for our overall performance, generated around 264 crores in revenue, representing 7% of our consolidated revenues. For full year, seating business revenue stands at 1,100 crores. Besides our existing incumbent 2-wheeler OEMs, we have started supplies for 2 new age EV OEMs. These supplies for new incumbent 2-wheeler OEM will start in next 6 months. We are happy to inform that we have secured an order for a mechanical suspended seat and pneumatic suspended seat to be supplied to a domestic CV OEM. SOP of the said order is expected in Q3 FY25. Until now, we have been supplying suspended seats only to the export market. Exports continues to play a crucial role in driving the growth for seating business. We once again achieved export of around 200 crores from our seating business alone. Looking ahead, we anticipate seating business to maintain a healthy growth momentum fueled by new order confirmations and upcoming execution of new orders along with suspended seat order for the Indian market. Moving to acoustic segment, generated revenues of 213 crores in Q4, representing a stable 6% contribution. Acoustic business also grew by 13% on a full year basis to 133 crores. While the Indian business continues to demonstrate industry-led growth, the European subsidiary Clarton Horn continues to experience ups and downs. Clarton Horn did close the year with positive note, with a positive EBITDA and PAT for the quarter as well as for the year. Moving to other products and businesses, which have achieved revenues of 613 crores for the quarter, contributing 16% of overall top line. Out of 613 crores, 130 crore was contributed by controllers, 107 by sensors, 110 by blow molding, 68 crore by ADAS, 55 crores in the new EV JV. Besides above, the sales include aftermarket trading, external sales from Uno Minda Ltd and engineering sales in Europe, and batteries for aftermarket. Revenues for other business segment has grown by 50% to 2,236 as we continue to expand in emerging technologies. Over the years, we have built a very robust portfolio of sensors comprising of engine and exhaust sensors, active safety and comfort sensors, transmission and suspension sensors, CNG EV sensors, wheel speed sensors, and the latest addition is tire pressure monitoring system. Revenues from sensors have grown significantly from 160 crore in FY21 to over 400 crore now. We have combined ADAS division with sensors from operation perspective. Together with ADAS sensor secured revenues of 600 crores. Our controller business continues to impress with achieving 375 crore sales for FY24. Uno Minda EV Systems also clocked in 196 crore revenue in first full year of operation itself. Moving to aftermarket and international revenues, slide number 14 and 15 you can refer to. In terms of our revenue pie for the quarter ended March 24, OEM business accounted for 93% and aftermarket at around 7%. Our aftermarket division revenues stood at 223 crore for the quarter. Our international sales currently represent approximately 14% of total revenue, demonstrating steady growth in this segment. While the international market holds strategic importance for our future expansion, it is worth noting that our domestic business has been experiencing more pronounced growth. Moving to our debt levels, our net debt as of March 31 was at 1,318 crores compared to 1,078 as on March 23. The net debt has increased on account of expansion capex as well as expenditure for land bank, primarily at Pune and Hosur for around 220 crores. While sustaining and growth capex has been financed from business cash flows, expenditure primarily on land bank has resulted in incremental debt. Our net debt to equity stands at healthy 0.25. We have achieved ROCE of 19.8% basis analyzing profits annual profits of FY24. Kindly note that capital employed considered for calculation does include the capex for land bank as well as civil, which is currently not generating return. If one were to exclude only the strategic land bank, the ROCE would have been around 20.3%. In terms of return on equity for FY24, it stood at around 19.4%. The board has also recommended a final dividend of 1.35 per share, which is 67.5% of face value. Total dividend along with interim dividend already paid will become rupees 2 per share, which is 100% of the face value. We have been consistently increasing our dividend payout ratio from 10% in FY19 to 13.4% now. In last 5 years, our dividend payment amount also has increased fourfold from around 28 crores in FY19 to the estimated payment of around 115 crores for FY24. The above underscores our commitment to returning value to shareholders on a consistent basis. Moving to EV, you can refer to slide number 15 and 16. Revenue from EV two-wheeler OEM increased to 180 crore in Q4 as against 167 in last quarter. We witnessed growth in EV specific as well as traditional products sales to two-wheeler EV OEMs. The revenues from EV two-wheeler OEM is expected to continue to increase with SOP of various orders. We have built a strong order book for EV specific products as well as existing products from EV OEMs. We have received further orders from our existing products from OEMs across vehicle categories. The SOP of these orders will start in gradual manner in FY25, which will further boost revenues from the EV sector. Building up our EV specific product portfolio for four-wheelers, we had entered into a TLA with Star Charge to manufacture and sale of EVSE in India. The EVSE comprises of wall-mounted AC chargers designed for convenient home charging. These chargers are usually sold along with EV to customers by OEMs to provide ease of charging at home. Star Charge is a global leader in electric vehicle charging infrastructure and microgrid solutions operating in 67 countries and regions with manufacturing facilities in USA, Vietnam, and China. With millions of EV charging stations installed worldwide, Star Charge is at the forefront of providing cutting-edge charging solutions for diverse applications. Star Charge has been a strategic partner of 60-plus well-known OEMs and multiple renowned energy companies globally. The potential kit value of these EVSE ranges from roughly 14,000 rupees to 70,000 rupees with estimated application factor of 40%. We have multiple RFQs in hand for EVSE with high probability of winning some of them. According to the IEA, most EV charging demand globally has been met at home or at work and not by publicly accessible chargers. Uno Minda, in partnership with Star Charge, aim to revolutionize such home charging solution, paving the way for faster cleaner mobility adoption in India. In terms of capital expenditure, refer to slide number 24. As informed earlier, we have started construction at IMT Kharkhoda for our greenfield alloy wheel plant for four-wheelers. Though there was a delay in starting construction due to land acquisition, we will fast-track the capex implementation given the land acquisition is completed and machinery order is in progress. The phase 1 of lighting for plant at Khed is expected to commission in second half of FY25 with construction going on in full speed. Regarding four-wheeler switch plant Farrukhnagar, Gurugram, phase 1 comprising of sub-part manufacturing is completed. Given the humongous opportunities coming our way, we will continue our expansion drive in FY25 as well. The capital expenditure are already announced projects like four-wheel alloy wheel at Kharkhoda and Bawal, four-wheel lighting plant at Pune, Uno Minda plant Farrukhnagar, Uno Minda EV systems will be undertaken in FY25 as per plan. We are likely to further expand in Indonesia and aluminum die casting four-wheel with fresh capex announcements in FY25. As mentioned earlier, pursuant to additional orders, the board has also approved capex of 300 crores for expansion of two-wheel alloy wheel plant at Supa to add a capacity by another 2 million wheels per year. This will take the total capacity to roughly 10.5 to 8 million wheels per annum. For FY25, the sustaining capex is expected to be around 450 to 500 crores. and project capex of around 850 to 900 crores, including the expansion of two-wheel alloy wheel project approved today. In addition to above, we will continue building strategic land bank in locations like Gujarat, Hosur, and other related regions. Moving to strategic business update, the board has approved increasing stake in PG Minda from 47.93 to 49.9 by buying 1.97% stake in promoter-held entity at a consideration of 17 crores. The remaining 50.1 stake in PG Minda is held by the JV partner TG. With respect to merger of COSI entities with Uno Minda, we have received NOC from stock exchanges and approved from lenders, creditors, and shareholders. We have also moved the second motion application NCLT. The next date of hearing is in first week of August, and we expect that post the hearing, it will take another 2 to 3 months for merger process to get completed. Moving forward, the outlook continues to be promising with supporting industry volume guidance, commissioning and ramp up of multiple new expansions, namely EV plants, two-wheel and four-wheel alloy wheel expansion, lighting plant Gujarat and Pune, etc. While we have been guiding on long-term growth prospect of 1.5x of industry growth, we expect it could be higher in the near term. As you know, while quarter on quarter there is variance in margins due to inherent business modalities and challenges, we would like to maintain our annual EBITDA margin guidance of 11% plus minus 50 basis point range with a bias towards higher end. With our existing diversified product portfolio, new product technologies, we are confident of sustained outperformance over long term. With this, I would like to now open up the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mumuksh Mandlesha from Anand Rathi Institutional Equities. Please go ahead.
Thank you so much for the opportunity and congratulations on strong margin performance and entry into the four-wheeler EV segment, sir. So firstly, starting on the gross margin side, this quarter, can you quantify the impact of price hikes?
Sorry, come again, Mumuksh?
Can you quantify the impact of price hike during this quarter, sir?
There is no price hike, Mumuksh. That's what I think we said in the last call also. There are normally whatever are the customer price settlements, they normally tend to get settled in the last quarter of the year or maybe third quarter of the year. So you do see little more benefit in the last quarter. If I have to quantify that impact, that is roughly around 30 odd crores during the quarter.
Okay, sir. So now on the four-wheeler EV with the Star Charge now partnership, just want to understand how do you see the revenue trend for the Star Charge, and also now with the four-wheeler EV focus area. So over a medium term, any guidance you want to share how you plan to ramp up, like in two-wheelers you mentioned earlier?
Yeah. So I think Mumuksh, by end of next quarter, I think we will have much better clarity, because we have just signed the TLA and the team is in process of preparing the detailed project report. Post that we will have some visibility, but still, you know that our dependence is there always on the OEMs, and we normally don't comment on the numbers in terms of the expected revenues. But in terms of the entire product profile, because the Star Charge is only one part of it, we already have a lot of other products which currently are in the works, and some of them are also in operation. So maybe we'll give you a full picture where we have our results call after Q1.
Got it, sir. So Lightning segment is seeing a strong growth. So just want to get a sense, how is the profitability in that segment? Earlier it used to be like a high single digit sometime back. So how that has changed, sir? Is this the lighting as a more profitable segment among the other segments, sir?
I wish it was, but I think we have discussed this in past also. First of all, just to put some background, we know that the kit value for the lighting products as it moved from halogen to LED has increased significantly, and with a lot of bought out component in terms of electronics. And I think that has been the key reason why we said that the margin in the four-wheel lighting business specifically, which is seeing that kind of growth, is below average margins, so which is, continues to be there.
Okay. And lastly, on lighting part, we've seen a very good pickup on the new orders. Can you just guide how do you see the next year in terms of growth for this business?
Well, this business is, I think we have been saying very candidly that we are very, very bullish on this business with multiple, I would say, tailwinds, and also in terms of getting more business, tailwind in terms of transition from halogen to LED, increase in kit value going multifold, and also share of business gains. So we are very, very optimistic, specifically in four-wheel lighting business. We are currently in process of constructing our shared plant for lighting four-wheelers. Once that is up and running, that will give us the boost. In fact, even at the plant in Gujarat, which we have put up, it's almost running out of the capacity. The plant was commissioned only 1.5 years back or 2 years back. So this business will continue to grow, and our goal has been to reach 20% share of business as the first milestone, and I think we are on track to achieve that.
Right. Is there any guidance, any growth guidance for FY25? What kind of growth we can see for lighting, sir?
I think Mumush, same thing. He said we don't comment specifically on numbers, so my apologies for that.
Yeah. No, thank you so much for the opportunity.
Thanks, Mumush.
Thank you. The next question is from the line of Siddharth Behera from Nomura. Please go ahead.
Yeah, sir, thanks for the opportunity, and congrats on a great set of numbers. Sir, on this lighting side first, just to continue the last question, if you look at the current quarter and just analyze it, so it implies a close to 16-17% growth for the next year, and we also have this new plant which is coming up in the second half, which you mentioned. So, can you throw some more light onto which are the orders which are ramping up here, and does this mean that, this segment can grow at more than 30% probably in the coming few years?
So absolutely, Siddharth, first of all, thanks for the compliment. In terms of growth, whether it is 30% or 20%, you know that a lot also depends on the industry volume. So it's very, very difficult to say whether it will be 20 or whether it will be 30, but definitely it will outperform industry growth by margin. If you see last year itself, the four-wheel lighting business have done annual revenues of roughly around 1,200 crores odd. And the last quarter itself, we have done something like 380, 390, or close to, we can say, 400 crores. So with that itself, I think we are poised for that kind of number what you said, but a lot also depends on the industry volumes. So while we are optimistic, maybe we are able to achieve that, but very difficult to comment whether it will be 30 or it will be 20 or 25.
Okay. So can you provide the breakup between four-wheeler and two-wheeler, and where are you seeing the most traction here?
Obviously, four-wheeler lighting is the more traction to that. Two-wheeler lighting, we already are like 25% plus kind of market share domestically, and we already have much higher penetration in two-wheeler in LED. So there's not much of scope in terms of value enhancement. So it is the four-wheeler lighting business which you will see outperforming by a huge margin.
And sir, how much was it in the last quarter, four-wheeler?
Four-wheeler lighting, last quarter I said I think 380, 390 crore was the four-wheeler lighting business in India.
Okay. So sequentially, the last quarter, Q3 also you had mentioned about 340 crores from four-wheeler. So has the delta come more from the two-wheeler, is it?
No. So 340 to 390 I'm saying is only four-wheeler.
Yeah. But our revenues have grown from 850 to 970, so nearly 120 crores.
Yeah, so that also includes, Siddharth, the overseas lighting business in ASEAN and also in Europe. So that is overall group lighting business. What you are referring to is the Indian 340 crore. That's the Indian lighting business.
Okay, got it. So second question is on the seating side. Again, we have seen good improvement in industry volumes in two-wheeler and CVs, but our seating revenue seems to have been quite flattish sequentially. So some thoughts here. I mean, you have said that you have won a couple of orders. If you can quantify what is the size of these orders and how to think about the growth here?
So the new order which we have got this from the Indian CV customer is roughly around 80 to 100 crores a year, depending on the volumes. Plus the quarter-on-quarter number, I appreciate, yes, it is flattish, but that's what I think we have seen in terms of the CV volumes also, which have been actually negative in the last quarter. So the seating business revenue is almost half comes from the CVOR segment. Plus, there has been some headwinds in terms of exports. While we are the global supplier to JD, and there is a lot of exports, that has not been seeing significant volumes of take. In fact, it has been more static to negatives in terms of volume. So, while we have got business in hand, I think it's the volumes which we are not in our hands. I'm not trying to justify, but that is the key reason why the revenues are flattish.
Okay. So lastly, I mean, the two-wheeler oil capex, which is say about 300 crores. I think the last capex of similar size was about 190 crores. So why the capex intensity seems to be slightly higher here? And lastly, on this aftermarket revenues, we have not seen much improvement over the last 1 year. Revenues seem to be around that 270 to 80 type of run rate. So any thoughts what will drive this, or what are you thinking here? Thanks.
No, you are right. I think both the questions are very, very genuine to that. So first of all, the two-wheeler lighting project, which was announced at 190 crores, it was actually ended at 225 crores. By the time it got complete, there were significant cost overruns. And for that 225 crores, the land was already part of the first acquisition. So there was no land cost in the second phase. Now, when we are buying, setting up this new expansion, we have to buy this 13 acre of land from MIDC. Plus, over last 3 years, there has been a significant increase in the cost of construction and also the machinery, etc. So, while we tried to optimize a lot of things, plus also what is happening is in this expansion, there is a powder coating extra which was not there in the first phase. So, if you see, there is one specific customer who uses this two-wheeler wheel for a scooter with a different technology of coating, which the cost is higher than the traditional covering. While it does get compensated through better pricing, but the overall cost increases. So that is in terms of capex. And in terms of aftermarket, yes, you are right. The aftermarket revenues, despite our significant push in terms of increasing the sales, have not seen significant traction over last 1 year. But if you see the industry, barring 1 or 2 players, I think the numbers have been like that. People have not grown significantly. So while there was a significant growth year before, this year, which is FY24, has been flattish, but we are expecting FY25 to be much better than what we have done in FY24.
Got it, sir. Thanks a lot. I'll come back in this.
Thanks for that.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Raghunandan NL from Nuvama Research. Please go ahead.
Thank you, sir, and congratulations on strong set of numbers.
So may I request, sorry to interrupt you, sir. May I request you to use your handset, sir? Your audio is slightly muffled.
Is it better now?
Yes, sir. Thank you. Please go ahead.
Yeah. Congratulations, sir. Firstly, within the other segment, the sensor, controller, and ADAS part have done very well this year. How do you see the outlook for FY25? And secondly, in terms of the EV order book, congratulations on the increase from 3,300 to 3,700. If you can give some more color with addition for orders of traction motors, motor controller, how do you see the ramp up for this particular opportunity? And if you can indicate, how many customers you have got on the motor side. Just some color on how you see the growth ahead.
Yeah. Yeah, thanks, Raghu. In terms of the other segment, as you know, these are businesses which are primarily the sunrise businesses, which is maybe sensors and controllers. The application is going very, very high. All the EV products are also part of this segment. So we are very optimistic in terms of the growth of some of these businesses. And as we move forward, normally our barometer is once a business crosses 10% of total revenues, we start showing this separately as a segment. So I'm pretty sure in next few years, we should be having one of the businesses who will actually cut into that category. And in terms of the EV order book, the large part of the orders which we have secured in the last quarter is primarily from the existing businesses, which are the EV agnostic businesses, while they are from all the EV players, but nothing significant from the EV specific product perspective. And in terms of the motor business, while we have got a couple of new customers onboarded, the SOP of those, the onboarding will happen in business secured in the last quarter primarily. The SOP will happen sometime in the second half of FY25. I think one customer is in Q2 itself, and the rest I think are in the second half of FY25. In terms of motors and in terms of motor controllers and others, there is going to be a significant ramp up in the current year, as I have discussed. Some of these products have gone into production in the last year, and some of them will get into production in this year. And as I said, in the first year itself, this JV has clocked revenues of close to 200 crores, and we are pretty optimistic that it will see a significant growth in the coming years.
Thank you for that, sir. And a couple of quick clarifications. One is that 30 crore price settlement which was received in Q4. Instead of looking at Q4 gross margin, it would be better to look at full year FY24 margin to get a normalized level. Would that be a right understanding?
Absolutely, Raghu. I think you have said what I wanted to say. In fact, that is what I always say, that, and I think I said in my commentary as well, that we are in a business where quarter to quarter you might see there is a variation in terms of margins, because we are not a B2C company. So there are times when the settlement takes time. There are times when prices go north. There are times when prices go south in terms of the commodity pricing. So there are various factors, but everything gets evened out on a full year basis. So that's why it's very important to see the full year profitability, and that's where we have improved by almost 25 basis points on a full year basis. So I would say that is more realistic, and I appreciate you asking that question.
Thank you for that, sir. And in terms of, because you're adding capacities to meet the strong demand, there will be some upfront cost. But like over a period of 2 to 3 years, how do you see the triggers for the margin?
No, we are very, very optimistic, Raghu, and as I said, and as I think I said in the commentary also, while our margin guidance has been 11% plus minus 50%, I said for FY24-25, we would tilt it towards the upper end of that range. And as we move forward, and as you rightly mentioned, a lot of these projects, once they come onto stream, normally we see the third year of production as a stable, third full year of production as a stable operation. And that's where you expect that business to deliver its expected volumes and profitability. So as we move forward and as these capexes all come online, gradually, ideally, we should see some uptick in margins benefiting from the operating leverage and also scale, higher scale.
Just on the margin side, a last question. In terms of the revenues are going up for EV specific parts. So any benefits we can expect either in 25 or 26 from the PLI incentives?
So as we speak, a lot of our products are actually, while they are eligible in PLI, we are at a threshold of that 50% DVA plus minus 3-4 percentage points. So we are working on to see how we improve our DVA to meet that criteria of domestic value at 50%. I think that is the only key reason which is holding us back. There are some of the products which we are expecting approval from the government maybe in this quarter itself, but they are not very significant, so I'm not counting on that. So, and secondly, there's one product which qualifies the DVA major product I'm referring to is motors, but for that you need to have stable operations because they see an audit what is your exact DVA, etc. So that also hopefully we should be able to apply in the next year.
Got it, sir. Thank you so much and best wishes.
Thanks, Abhi.
Thank you. The next question is from the line of Ashish Jain from Macquarie. Please go ahead. Mr. Ashish Jain, your line has been unmuted. Would request you to unmute your line from your side, please.
Hello?
Yes, sir. We are unable to hear you, sir. May I request that you use your handset?
Am I audible now?
No, sir. We are unable to hear you, sir. Mr. Ashish Jain, may I request that you use your handset? So may I request that we move to the next participant? Mr. Ashish Jain, we would request you to rejoin the queue, please. The next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead. Mr. Ashutosh Tiwari, may we request you to go ahead with your question?
Yeah, hi. Am I audible?
Yes, sir.
Yes, sir.
Yeah, hi, sir. Congrats on such an exemplary performance during the quarter. And also probably nobody would have imagined the kind of growth we have seen in lighting segment few years back, or even sensor controller. I think these are really very, very strong growths we delivered over the last few years. And first time we crossed the lighting revenue, crossed even switches segment revenue. So my first question, and probably questions on these two segments only, how do you see going ahead sensor controller shaping up over the next few years and also lighting segment?
So thanks, Ashutosh. Lighting segment definitely continues to grow and will continue to grow as we speak over the next 4 to 5 years. The key reason I think we have just discussed also is the kit value gain, the new business, and also the expected share of business gains. Moving from 14-15% share of business to 20% is not going to be easy. While we do believe that we do have got businesses in fold, and it's only a matter of time we will reach that goal post of 20% share of business. The kit value also has been expanding, so we do expect this momentum to continue. But as I said, the only what we call the moving part is the volumes of the model which we have secured the business. So if that remains on track, I'm sure we will be able to deliver the growth in lighting business as we have done in past. What was the second question?
Sensor controller, I think we have done roughly 775 crores put together.
Yeah, so sensor controller also is doing phenomenally well. Sensor and controller business both are seeing a significant addition of new business. Controller, some of the EV product business which are part of UML are also into that business like telematics or wireless charger. There are a lot of other businesses which are part of this business which continues to grow, and also now we have aligned ADAS business also with the control, because that's also sensor, which also has a lot of sensors and related stuff. So sensor and ADAS internally we have aligned as a single business, and as sensor also the number of sensors application has been consistently going up. And as you may have noted, we have also added one more product to our kitty, which is tire pressure monitoring system sensor.
Yeah.
And we have already secured business from one of the largest OEM in the country. So hopefully that should also go into production sometime in the next year.
So I think you mentioned that in the fourth quarter the controller was 130 crores and sensor was 100 crores, right?
No. Yeah, fourth quarter, okay.
Yeah.
Yeah.
So we already hitting 920 crores 100 in the last quarter. So I think this business also overall will grow very strongly. Like, can we assume like say a 20% plus kind of growth rate in this business over the next few years?
I would definitely like to work on 15-20% kind of growth, assuming the industry volumes also support.
Okay. And lastly, on this alloy wheel four-wheeler business, don't you think that we are probably a bit behind in terms of category addition, because the way it's ramping up and the way we are operating, we probably have to fasten the things up. Obviously, there's some delay due to this land equation and all, but going ahead, probably we have to drive ahead of what we're guiding right now.
No, absolutely, of course, you are right, and that has been the feeling inside the organization. Because this is a business we all know. We've been seeing very, very closely for last 4 years. We've been running like hand-to-mouth situation, and this is not a good situation to be in. While it is good that before the project is announced, even your surplus capacity gets blocked, but that's what the market is giving, and if we are not ready, we might lose the business. So we have been now working very aggressively in building this land bank, and large part of this is also identified for alloy wheel. So while we are putting this 120K project in Karkoda as of now, the space and everything what we have earmarked can grow up to 240,000 wheels a year. In addition, we might soon have to even expand our plant in Gujarat, given the volumes are being ramping up there. So there also we might see some sort of expansion in the current fiscal year. So, but for your point taken, we have to be a little more aggressive in our capacity addition in the four-wheeler segment.
And just one more thing on this Minda West Port, that CNG kit business. You mentioned the sales is 177 crores in the fourth quarter.
Yeah.
Am I?
Quarter?
No, I just missed the sales number. You mentioned some sales number for
Full year.
Full year.
Full year.
Okay, and that also will grow quite fast.
Yeah.
It's a high margin business as well, right?
Yeah, little obviously above average margin, and I am pretty confident over the next few years this also has a potential to 400 to 500 crores kind of 400.
Okay, thanks and congratulations and all the best for the next 3 to 5 year of growth. We have delivered extremely strong.
Thanks, Ashish.
Thank you. Bye.
Thank you. The next question is from the line of Ashish Jain from Macquarie. Please go ahead, sir.
Hi, sir. Good evening. Am I audible now?
Very faint, Ashish.
So let me try increasing the volume from my side. Yes, sir, you can go ahead.
Sir, my question was again, on the lighting business. Is it possible to, give a sense of volume growth versus value growth that we have seen in the four-wheeler lighting business particularly?
Very difficult to say, Ashish, volume growth versus value growth, because even if this is a business currently we are, or the momentum we are in, even if the industry doesn't grow, this business will grow. But only issue is that the businesses we are tied up has to grow more. For example, and why I'm saying, I think you would have heard in my commentary, I said we have got 3 like long tail lamps. Like these tail lamps, the cost is almost 18 to 20,000 rupees, almost like per tail lamp. Whereas the other model, if it's a halogen lamp, is costing 2,500. So if the volume of that model goes up, then obviously your destiny is linked there. So very difficult to say what volume will grow and how much your sales will grow. But my point is, even if volume doesn't grow, I think this business will continue to grow. But only issue is the growth of that high value business, which is not in our hand. And that's why it's very difficult to say. I think the other colleague also has, other friend also asked this question, how much of growth we should expect in the next quarter or the next year. So as I said, while we are gearing up our capacities for the kind of growth you expect, but very, very difficult to say whether it will be 20% or 25% or a 30% growth.
Right. So, but is it safe, so given the kind of model launches we are seeing and particularly the product you spoke about, that is, really seeing higher penetration and all. So is it safe to assume that the way industry is moving in terms of model launches and these kind of features, this is like a structural thing and there's no reason for us to believe it will slow down?
No, absolutely. If you see some of the global markets, you see the ASEAN markets, you go to Korea or Japan or other countries also. I'm not looking at commenting on the developed world, which has more affordability. I'm commenting on market which does not have more affordability. There also you see the long connected tail lamps penetration is very high. So yes, it might be a case where there may be a structural shift, but it all gets driven by the customer preference and also the customer is willing to pay that delta. But yes, it could be, but difficult to comment on because as of now, not many vehicles have got these connected long tail lamps or headlamps.
The second question was on switches business. Like if I look at the last 3 quarters, switches business has been pretty much flattish in that 900 odd crore kind of time. So how are we seeing that progressing from here on?
Yeah. So switch business, we all know that we are actually having a lion's share almost in both the segments, be it four-wheeler or two-wheeler, both are above 50% market share. So obviously to gain beyond that market share is difficult, but even if you see, despite that challenge, even on a quarter-on-quarter basis, this business has grown from 930 odd crores to almost 90, roughly like 3 to 4%, it has grown quarter-on-quarter. So I think while your point is valid, but I don't think I can compare this business with a light business where there is a structural change. So, but if you see year on year, on a full year basis, this business has actually grown 14%. Whereas the industry, if you see average blended of PV and two-wheeler has not grown with those levels. Maybe it's like 8 to 10%. So still there is an outperformance in this, despite the exports are currently not to the quantum what we have expected. So this business definitely is not, as I said, in the very, very high growth trajectory like alloys and lights, but it will continue to outperform the industry volumes supported with the kit value and exports.
Okay. Thank you so much.
Thank
you. The next question is from the line of Rishi Vora from Kotak Securities. Please go ahead.
Yeah. Hello, sir. Congratulations on good set of numbers. My first question is pertaining to EV segment. Can you just throw some light on how currently you are seeing the demand trends given the reduction in the FAME subsidy? And also in your order book, can you broadly give us indication on like what amount of order book is from the incumbent two-wheeler OEMs and what part would be from the new age OEMs?
So Rishi, first of all, very difficult to comment on demand, and I think you would have seen consistently we don't comment on industry volumes. What is the kind of penetrations or volumes, etc. We don't try and guess our customers. But in terms of the EV order book, remember we normally don't comment on order book also, but we have started commenting on EV order book because there was a request from every corner to do that.
Right.
So I would request not to further ask to split that information. So I think even this information we have been discussing internally as to how long we should continue to give. And if all of you are okay, I would at some point I would like to stop that also because this does not give a full picture of the organization. Because we are today almost a 20,000 crore organization and aspiring to become multifold from here. And when I give only this EV volume, I am commenting on only a fraction of the total business, so which might be okay, which might not be okay. So even we are sort of trying to debate ourselves as to how long we continue this. But my humble request, please not push us to give a further split of these numbers.
Understood, sir. And just on the gross margin side, we have seen some uptick in the base metal prices recently. Obviously, our alloy wheel business will have some dependence on aluminum, but apart from that, which would be major commodities for us, and are we seeing any inflation currently in those elements?
So Rishi, this is part and parcel of life. Yes, you are right. Recently, aluminum prices have seen a spike, but most of our businesses, during this commodity hike period post-COVID, I think 3 years back, we have tried to align all our contracts with the customers with the annual price escalation, quarterly or half-yearly price escalation clauses. So on a full year basis, almost 95% gets passed through to our customers. So that is not any concern for us. So if prices goes up, we try and collect from customers. If prices go down, we share with the customers. So from that perspective, I think we are pretty hedged.
Understood. And so just last data question, what would be the full year revenues for four-wheeler and two-wheeler alloy wheel business? You might have shared, but I just missed those numbers.
For four-wheeler and two-wheeler alloy wheel business?
Yeah, revenues, full year revenues.
Okay. So two-wheeler alloy wheel business full year revenues is around 670 crores.
Right.
And four-wheel is roughly around 1,350 crores.
Understood. Thank you, sir. All the best.
Thank you.
Thank you. The next question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Minda Ltd.
Yeah, thank you for the opportunity.
Yeah, just to correct the numbers which I have given, 1,350 crore was for Minda Ltd only. Yeah, Nishit, sorry, go ahead.
Yeah, so congratulations on good set of numbers. Mr. Bora, my question is that you have grown so faster compared to the industry growth. What would be your market share of the segments now, especially the bigger segments, the lighting, the alloy wheel, the tool, the seating business? And
your voice is very volatile, Nishit.
Yes, sir. Your audio is not clear, sir. May I request you to use your handset, please?
Hello, I'm already in handset. Is it better?
Yes, sir. It keeps breaking. May I request you to use your handset in case you're using a headset, sir? Thank you.
Is it better?
Yes, sir. Please go ahead.
Yeah, my question was that you have grown ahead of industry and across almost all segments over the last few years. So just wanted to understand what would be your market share across different segments now, alloy wheel, lighting, seating, and maybe sensors and controllers. I would assume you are very small right now and there's a lot of growth potential. So how are the market shares in these three categories in both two-wheeler and four-wheeler, and how it has moved in the last 3 years, or any data point you can give us on this would be very helpful.
Yeah, so the market share in four-wheel alloy wheel is over 40% as we stand today. In terms of market share for two-wheeler, we are roughly at around 15-16%. We are just 6 billion, and I'm analyzing the capacity, not actual sales for 23-24. 6 million on roughly 35 million kind of a consumption. We will be roughly at around 15% market share because I'm almost running at capacity for two-wheeler alloy wheel business. In terms of lighting, two-wheeler we are roughly around 25-26%, and four-wheeler we are roughly around 15-16%, 16-17% now.
And seating, you mentioned you are above 50% in both the categories, right?
No, seating we are above 50% primarily in CVOR, not in the two-wheeler.
Okay. And you just mentioned that one question was that industry leading passenger vehicle OEMs are talking about a very, very low growth in the passenger vehicle industry this year. Even SIAM has talked about only about 2-3% kind of a growth. Are you seeing any such slowdown in the volumes, industry volumes, or on the production schedule? So what would be your view in general about the industry growth?
So as I said, Nishit, we don't comment on industry volumes, but I can say what volumes we have been guided by the customers to plan for 24-25.
Okay.
And they tend to be little low in PV segment, which is 5-7%, and for two-wheeler segment it is 7-10%. But as I said, these are guidance from our customers to be prepared with the capacity. Now, how much actually will happen, I think our customers are best placed to respond to that.
Correct. And just one number I missed out. What did you talk about the FY25 capex? Was it 850 crores for project capex and 450 crores maintenance? Is that correct?
Yes.
So total 1,300 crores.
Yeah, 13 to 14, yeah.
Okay. Thank you so much.
Thanks, Nishit.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question for the question and answer session. I would now like to hand the conference over to the management for closing comments.
Thanks, everyone. So I would like to thank everyone for joining on the call. I hope we have been able to respond to all your questions adequately. For any further information, we request you to please do get in touch with us. Stay safe, stay healthy, and thank you once again for joining with us.
Thank you. On behalf of Uno Minda Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your line.